Welcome back to CMG Oral Space Lesson. This is a masterclass on mastering your candidate patterns. My name is Emmanuel Okujo, and this is episode 2022. And we are currently treating the topic, trading the engulfing bar with supply and demand levels. If you are new to this channel, please try and watch the videos of this playlist from the beginning. You have a fair and knowledge of whatever we are doing here. If you don't do that, I think following somewhere here, you might get confused. So please do that for me. Now we have done engulfing bar candlestick trading. We have a number of strategies. We have done that with the moving averages, the fibs. We have done that in the sideways market and then with the trend lines. And this current one is for trading engulfing bar with supply and demand zones. In fact, what we are doing now is actually what trading strategies for the intermediate forex traders, right? Trading strategies. You can actually adapt this and you'll be good to go. Now, supply and demand, we are on supply and demand. Now, if you are an economic student or someone who has idea about business, you may have heard, in fact, this is the common words or terms that we use around us in our everyday life activities. We have supply and demand, right? So in this market too, we have supply and demand. Supplying money, right? And then with what? With respect to the demand of that money, right? There's a demand for money, and then we have to supply that. It's a normal term, right? So now supply and demand areas are more powerful than support and resistance. Supply and demand areas are more powerful than support and resistance. It is a place where banks and institutions are buying and selling in the market. If you can identify these turning points, you will make a difference in your trading account, right? Someone may ask, didn't I say from the beginning that this market is actually for what? The big institutions. So why am I saying that this is what? The actual place, the areas that they trade. Yeah, we are saying that because this is the areas that they actually make decisions, right? Where they are vividly seen, the activity are muchly felt, right? That the activities are felt. You can actually see the move, what is happening there, right? They are in the market though, but there are some points that you can actually feel their power, their pressure, their momentum. So that's what we are talking about. Now, to trade the engulfing bar pattern successfully with supply and demand areas, you have to be able to identify quality supply and demand levels on the chart. According to my experience, there are 3 factors that define quality supply and demand areas. Please, this is a very important terms to understand. You often hear about this in this profession. So if you don't get it, you don't have the understanding, you will get confused all the time. Now, 1, the factors to consider if to actually identify supply, a quality supply and demand areas. 1, the strength of the move. The strength of the move, right? Sometimes on the charts or sometimes during the day, market is not that much, wouldn't move that much. You see that the market is slow. You hear some of your colleagues saying that the market is a bit slow today. It means that these people are not actually doing anything. They are not doing anything. There's no decision taken on the side of the other party. So the market is very slow. That is what we are talking about. So when the market, when the strength is is very huge, then you realize that this is what is happening. Or maybe we are at a demand or a supply areas. That's what it means. So we look at the strength of the move. Pay more attention to the way price leaves the zone. Right? Pay attention to the way the price leaves the zone. This area that we are talking about. If the market leaves the area quickly, if it leaves the area quickly, this is an indication that banks and institutions are there. I'm going to read it again now. Pay more attention to the way the price leaves the zone. If the market leaves the area quickly, This is an indication that banks and institutions are there. That's the strength to actually identify that this is a supply area or demand area. Now, the second one is what? Good profit zone. You have to make sure that the level provides good to reward ratio, right? I think this is not really important here. I think I will explain later with better description. Now, 3, bigger time frames. So the daily and 4-hour supply and demand areas are the most powerful zones in the market, right? The daily and then the 4 hours supply and demand areas are the most powerful zones in the market. The chart below shows a quality supply area. As you can see, the move was very strong, and that indicates that the banks and institutions were there. The formation of an engulfing bar was a clear signal that the bears are still willing to sell the market, to sell from the same level here. So let's see. So you see, this is the area, this is the supply area, right? So this is the supply area in that yellow rectangular box, right? The supply area, the yellow rectangular box. And then we said that something like, when prices get to this area, they don't waste time there, right? They don't waste time in this area. So you realize that in this area, the only candles that you can actually see there is 1, and then even, excuse me. Sorry, yeah. The candles that we actually see, we see is this candle, which is fully formed there. The rest, they hit this area, they leave fast. This candle also got to this area, it left the place fast. This even did not actually even get there, right? They left back. Now this area also got here, candle got here, then they left. So you see this area, prices left the area sharply, quickly, right? So that is a supply area. It's as simple as that. And then the supply area, when it comes to the top and then down the levels, the supply is at what? The resistance level, right? Please just get this in your mind that the supply is at the resistance level. The supply area is at the resistance level. Prices get there and they get rejected fast, sharply from that area. So you realize that there are no much candles. The candles there are not many, very few. And even if you see a candle there, what you see mostly there are wicks, right? They are wicks found there. Full candlesticks are not usually found there, right? The wicks are found there, prices get there, and then they leave sharp. And this supply level is at the what? Supply area is at the resistance level. That is as simple as that. Another example is here. This is it. Candles get here, they leave. Candles get there, they leave. So it depends on the area that you have drawn. You want to see that supply area, right? And then how long you want to trade. Like I told you that when you choose a price action, a chart, a time frame, right? You can see the general movement of the market. That's the market structure. And within that very market structure, you can actually see some other smaller market structures among them, right? So that is what is happening. So this is what the supply area, right? Now, I think that it is not complicated to identify these zones because they are characterized by strong moves. The secret behind supply and demand areas is that big players put their pending orders there, right? The big players, the big institutions, they put their orders there. When the market approaches these zones, we see a crazy move from these areas. So what it means is that if you put your SLs around these areas, you always run at a loss. So that's what it means. As a retailer, putting your SLs around that place, you hate SLs. Now, if you can combine trading supply and demand areas with the engulfing bar price action signal, you will increase your chances to make money as a trader. Now, I think we are almost done with the slides. And this is a very important topic that I don't want to mix it up with any other topic, right? So for a recap on this very video, right? This very video, the supply and demand area. Your take home should be that supply areas are the resistance level, right? And then if you put your SLs there, you mostly hit you'll be taken out of the market. Sometimes this is what the market does. It will come and sweep away all the SLs, sweep them away, and then later move in that direction. That's what it does, right? And then the demand levels is at the what? The support level, right? The resistance, your supply is at the what? The resistance level, and your demand is at the support level, right? So it means that if you put your orders to around this place, you can actually get your orders triggered, right? And then there could be the high probability that you're going to win a trade, or sometimes you can also lose a trade, right? But if you put your TPs around this place, you also want to make money. So it's as simple as that. I think we have better understanding of this as we progress with more with charts, technical analysis, to understand what it means here. So please just take this one as it is, and then we'll look at it further. Thank you very much for watching this video. See you in the next episode. Please like and subscribe to our channel. And if you need any one-on-one assistance, please get to us and we will link up. Thank you very much. Bye.